Hi and welcome to this week's Big Picture. So in this Big Picture I take a look at the markets in different ways. Firstly I look at from the central bank perspective, then I look at the sentiment from the biggest traders out there, the asset fund managers, the leveraged money, look what that's doing. Look at the key potential moving data for this week, the week ahead, and I look at the trend. And what I've done this week also is I've sort of looked at the currencies and I've picked what are currently looking the weaker currencies, the middling currencies and the stronger currencies. And we can sort of look, and I just thought I'd demonstrate through the towards the end of the outlook of how they're currently moving. So it's good for position stroke swing traders in particular, this sort of data. But it should also, you can consider it for a bias on the intraday. Now it's obviously intraday occasionally you're going to be going against the run, but for the longer term, as I say, and for the position holder, it's much more interesting. Anyway, I'm going to start off looking at my grid of analysis here first. We're just going to look at where we're sitting on this here. I'm just going to give it a little wiggle to get rid of a funny little line that sits. It's insisting and sitting down the middle of the page, so we'll have to leave that. So I'm just going to run through these very briefly, but just to give you an idea what's going on. And starting off with central bank and the speakers. Now we've got quite a few speakers out this week, which could affect the dollar to the potentially to the downside. You never know; some of them may become a bit more hawkish. But we've just got to look at the moment. If anything, there's a downside bias slightly on the US dollar in terms of no further increases this year. In fact, as I said before, there is one decrease actually priced into the markets. Now, if that doesn't happen, of course, that would be bullish, but that would probably be towards the end of the year, not the earlier part of the year or mid-year, as we're nearly there. But so it's gone from quite a hawkish outlook to a flat to negative, slightly negative outlook in the bigger picture there. Not necessarily central bankers completely, but the markets themselves have priced that in. But some of the FOMC speakers, and we've got some coming out this week, have gone a little bit more dovish. What's the big money doing? Asset money's come down a little bit. It's still positive, still sitting there holding net positive positions. Hedge money's got a little bit more bullish, so but their positions are relatively modest on the US dollar itself. What's happening in terms of moving this market, and the biggest one is the one at the top, which will affect also the one at the bottom here. I don't talk about the fundamentals and etc. again for the S&Ps. This is the E-minis. I don't talk about it all again, but certainly the Chinese trade talks, they seem to have stalled somewhat. It's certainly no deal agreed on Friday, although there were sort of good suggestions, but not really a lot happening there. And the more it's left and the more it stalls, the worse it seems to be in a sense, but we'll see. But for now it's stalled, which suggests regardless, actually I meant to put that as a downward arrow actually on here, just forgot to correct that one. So looking at that as a downward arrow, but we're overall for the US, there's signs for dollar weakness. We've certainly seen a trend for the dollar weakness, and it's showing also through into the equity markets there in the shorter term. So that's where we are with the US, and I've done both the currency there and the markets, and that's showing across a load of different markets there as well. Euro, looking at the euro, what's going on here with the euro? Okay, there's lots of talk about how things can be perhaps something can be done from the central bank point of view, but they've got very little scope to do too much. The key thing this week, and it's been quite key to the overall position of the Eurozone, is the German economic sentiment, etc. That comes out this week as well on the 14th. We've got then the GDP on the 15th and the Euro flash GDP on the 15th. So important days ahead for us, and particularly looking at the powerhouse of the German economy. There will be speakers, I think, later in the week as well. The Deutsche Bank, or not Deutsche Bank at all, the Bundesbank speaker coming out later in the week, which the head of the Bundesbank, which could say things which could certainly move that the euro market. But for now, it's technically, with the dollar coming off, it's been sort of a bit of a gainer. It's not the clearest of markets technically. What's happening with the big money? The big money is a bit edging a little bit more into some long positions there. The hedges are still coming, well, they're coming off actually a little bit. So there's reducing their sizes there, but still negative. Moving through to the pound. The pound is, well, it's gone negative across the board in some respects. I say that the central bank still believes there's potential for an increase if deals are made, potentially, but aside of that, it's going to be flat. The markets, they're getting a little bit more negative. They're increasing their negative positions here on the asset money. The hedged leverage money is actually reducing their bullish look on it, so it's dropping down. So again, negative sort of overall. Brexit talks, cross-party talks, cross-part talks, I think that might be a better description of it all. Not going anywhere really, and it's really soft outlook for the pound as it stands at the moment. We'll be focused really on tomorrow's employment data and look at the particularly wage growth will be a significant thing. It's heading up those numbers tomorrow, but that may just keep the pound more afloat than it has been. Dollar yen flawed fundamentally. There's nothing they can do. Well, there's not a lot they can do really, central bank wise there, and they're not doing too much at the moment. What's happening with the really harsh short positions are being reduced slightly. Now this could be a slight change of tact here with the big money. Already we've seen that the technicals rolling over, but that those short positions reducing slightly. So overall, we got no major data there this week, so it's just left as a safety currency, and that's the big thing at the moment. Is it's a safety currency, and it's made it king of the pile really. It's one of the strongest currencies, or the strongest major out there for now. Aussie dollar. Aussie dollars, well, its next change still may be a reduction. It wasn't last week, and it sort of gave it a bit of a temporary boost, but all the same, there may still be reductions in play. Key coming up at the weekend to be is the parliamentary elections. I'm sure that we're probably looking previously. I believe it always gets a bit sort of muddled, and there's no clear leader overall. So it could be not the greatest thing really, I suppose, because you do want a clear majority. We'll see. I may be talking wrong there. Wage price index out on the 15th, employment on the 16th. So key numbers again to show the sort of state of the economy and how it's filtering through. But it does look pretty much weak across the board at the moment. Canadian dollar. We've taken a more dovish tone last time. That stays pretty much the same. We've seen some asset numbers coming down on the negativity. It's reducing for the asset money. The hedge funds themselves have actually increased in their positions slightly negative. They've become more negative, and it's a bit of a mixed bag there. It's still, in the bigger picture, it's still bullish technically, but it's been in a real chop at the moment on the dailies there overall. So not a clear sign there. New Zealand dollar, much more simple to see. It's negative, and we may be seeing more reductions here. Actually, it's 1.5, I think now it's reduced, but we may see more negativity coming through. Hedge funds down slightly on there. It's gone negative again. Actually, it should be in red downward thing there. It's gone negative again, switched back negative. No major news out this week, and technically we're really quite negative on New Zealand dollar. So that's how that picture looks. So when you take that all into shape, I'm just going to use this and draw it. He says hopefully in terms of order from the strongest to the weakest, and the neutrals in the middle here. So strongest, well, it's JP yen, Japanese yen. So that's the strongest sitting there. More neutral is the euro and the CAD, because I mean they're blighted, or the euro's blighted fundamentally, but doing a little bit better. But it's not a clear run on it. I wouldn't say the yen was a clear run, but technically and safety wise it's given it the bonus. And CAD it sits in this sort of more neutral place. Canadian dollar, it's not really gone too far either way, but if we see a big dollar sell-off, we could see these currencies gain more from it maybe. The weaker pairings really going through the stronger of the weaker to the weakest is really the GDP, the GBP, Great British Pound, GB Pound, so the pound, and then you're looking at the Aussie and the New Zealand dollar. So how can you use this information? Well, you can New Zealand, even NZ. You can be looking at the crosses of this, crossing the yen, if you like, with some of these others, the pound, the Aussie, or so long. Looking for the long side on the yen effectively. So most of these are it's the pound yen, Aussie dollar yen, New Zealand dollar yen. So looking at selling the majors against this is really where it's at on the cross pairings from that data. I'll just show you a couple of examples of that. Let me just get rid of the pen here. Just show you a couple of markets where we'll have a look at the Aussie, the pound yen, for example. This is just a big picture of what's happening here. Selling off, sold off quite strongly last week. It's looking negative-ish at the moment. May have a little blip up, but really looking weak. But the real one and the weakest of them all, in my book, is the New Zealand dollar yen. That's really been tanking over, gap the other week, and it's rolling over towards those prior lows there. So that's probably the weakest of the lot there. So if you're looking at the cross pairs, as I said, there's a way to do it which keeps the fundamentals on your side and gives you more position stroke swing opportunities. So that's that. Let's just have a quick look through very quickly where these currencies are from a stroke weekly, daily. Well, to be fair, the euros trying, as I've been kind to it and suggested it's almost bullish, and it has actually put a higher low in the middle of here. Needs some continuation. We need to break this or really confirm it properly, is to break the first of the fifth high there, and it could be edging up to do that. I'm not going to bring the other charts back. If we can break this or lower time frames up, it's looking like it might pitch up there. If it can break this daily 50, well, the daily 100 looks like the next point to next target area on the upside there with those prior highs. So technically, if that's broken, you've got a good few pips there potentially. I say a good few, it's not that many. It looks better than it is, about 60 odd pips there sitting there to the next point there. So still looks, well, I say still looks relatively bullish, and more bullish if it breaks that 50. The pound, I'm not going to go through the weeklies as well, just looking at the dailies here. The pound, it's well, to put a doji in on Thursday there, Friday shooting inverted hammer maybe. It's edging up at the moment and may pitch into its weekly pivot. I will be looking to see if it hits that weekly pivot and if it rolls, because I'm still looking at a potential target towards that daily 200, and if it breaks that, more to the downside. Now fundamentally it's one of the stronger pairings, stronger currencies, the pound, in the fundamental terms, but technically it's not doing too well, and of course we've got Brexit hanging over it, so it sort of kills it. That makes it a little bit softer, but maybe the unknown at times. Dollar yen. The dollar yen, as I said, gained pretty well last week. Friday it gave back some of those gains, but would like to have again seen it pushing up towards its weekly pivot to sell into, because at the moment it does look like it could be the main beneficiary of the lack of talks. That's where the money seems to be heading into. Okay, Aussie dollar, one of the weaker pairings, remember, and you can see this technically it's had some nice little movements upwards, and a bit choppy I guess here, and arguably there'll be people looking at divergence across the lows there, and yep, it has had a divergence started on the previous week there, but hasn't really done much with that. It's showing the weakness that may be in that pairing, so potential still to roll over. And if we saw particularly anything good happening in US, any good data coming through, it could make this could zip down quicker. Canadian dollar has not done a lot, made a lot of gains here. Oil price has been holding up overall. Yet it's not. I mean, it's daily on a Friday point of view, it pushed down nicely again and strengthened against the US dollar. But overall, it's a bit of a mess. It's consolidating. We've seen it time and time again when it sits for long periods here, and this is no exception. Makes it very difficult to be a swinger or anything on that. Best left alone sometimes. One of the weakest pairing of the lot in my book, weakest major, is the New Zealand dollar at the moment, and it's heading south again this morning. They're off of the weekly pivot, etc. So that's certainly the weakest. So looking at the crosses, it may give you a couple of opportunities if you get any rallies through the week to sell into. That's pretty much it for my outlook here. Oh, I didn't look at the should have looked at the S&Ps, because as I'm covering those a little bit more. And S&Ps, well, Friday saw a little bit reversal and push up on some positive comments, but it's already gapped down a little bit. That may be filled. We've got the weekly pivot above us. Let me just squeeze this so we can see a little bit more. There we go. So that there is some potential for it to come up towards that weekly pivot. If it did, that would be for me. I would consider shorting at that, unless there's a deal done soonish. This it opens the scope for further downside. And remember, the other thing, the key thing here is what the big money is doing here. I may have not spoken too much about it before. Give me a pen. There we go. That pen will do. What's happening there is interesting. Is the big money is coming out of it. Has been coming out of it for a few weeks now, and the short positions from the hedge funds have been reducing. So they're now, when they get more bullish, it tends to this actually market actually works opposite with these. Instead of the market working when they get bullish, the market seems to often go down. Maybe they're just unloading, taking profits of their short positions as they're taking the opportunity to take some profits out of this. We'll see as the market's coming down, but they're offloading their short positions. The asset fund managers, though, they're certainly unloading their bullish positions. So it gives me the thought that we might see a bit more correction. Okay, that's pretty much it for me. Have a great week. I will speak to you next week, and obviously I'll give you much more detailed updates in the daily outlook. Bye for now.